Hi everyone, it's Mike Bond with Hard Money Mike. Today we're going to go over when is it better to use hard money instead of using a bank. Let's start out with what is hard money. Hard money is asset-based lending. We're not looking at credit score. We're looking more at the project, more at the property itself. So in this day and age, with banks getting tighter, with credit score requirements going higher, more funds going down, hard money looks at the asset in the deal. So it is possible, even in this day and age, to get 100% financing with a credit score that is not in the 700s. So hard money is used for real estate investors when they need stuff that's based on the asset, and maybe even when the credit score is not up to par with the banks. And who uses hard money? It's everyone from the beginner to the people who have 20 plus years of experience, because even the people with experience need hard money every once in a while when they're looking at asset-based lending. So it's the small investor, it's the big investor, it's on any transaction, any deal. And I want to go through one other reason. It's the flexibility of hard money compared to a bank. You could look at funding small deals in small communities. You could look at funding land deals. You could fund seconds, thirds. Flexibility with hard money is the key. 100% financing on BRRRR, we do them all the time. 100% financing on fix and flips, as long as the ARV is good. That's one of the biggest differences between hard money and banks. Hard money looks at what is the value of the property and what can it be, so it's based on the after repair value or the ARV. It doesn't matter when you go to a bank what kind of deal you're getting on it, they still lend based on loan to value or LTV. Example, I find a house that I'm picking up for $300,000. It is worth $600,000. As a hard money lender, I feel comfortable lending up to 100% on that deal because it's a great deal. Go to a bank. They still look at it as the lowest of. So it's either the lowest of the appraised value or the purchase price. You're buying it for $300,000. That's what they're going to use as their base. And from that base, they're going to require you to put in 20, 25%. So when you're comparing hard money where it's better than banks, is when you have good deals. When you have good deals based on ARV and you don't want to put a lot of money in. It's also on BRRRR. If you're looking at BRRRR and you want to find that undervalued property and use a hard money or a lender to fund 100% of the purchase in rehab. Once again, if it's a good deal based on ARV, in this market, maybe 70, maybe 75%, and you can refinance it out, hard money has flexibility. So hard money is better than banks when you're basing it on ARV. Also credit score. Most hard money lenders don't look at your credit score. They may look at your credit to make sure you're paying and that you're not in bankruptcy, foreclosures, all those. But if you have high usage and your credit score is low, no big deal for hard money lenders. They're not going to kick you out the door because you had a 679 credit score instead of a 680. So hard money works for 100% BRRRR with a great ARV, 100% flips with a great RV. Seconds, thirds on properties, doing loans in small towns, doing small loans. Flexibility and uniqueness is where you go for hard money, especially, like I said, if the property is based on ARV and the value is there. Credit score, not an issue. Income also. Banks want you to fit in their box, 28% or 42% DTI or whatever their coverage ratios are. Hard money, as long as the property is good, it's a good property with a good exit strategy, you can negotiate and get hard money lending. So here's the three big differences when you're looking at, do I use hard money or do I use banks? If you want to base it off ARV and you have a great deal, hard money over banks. If you have a credit score that just does not hit into those 700s, hard money over banks. And income, maybe just started, maybe your income is not 2 years out, maybe you just write everything off. Hard money is better than banks. Yes, banks will have some longer term options. They will also have some lower rates. Not that big a difference in this market. It's usually like a 1 or 2% spread between hard money and what banks are doing. So when you're looking for flexibility, when you're looking for options with the credit score and income, hard money always trumps the banks. So we're talking about hard money and banks, but to get a hard money lender to be flexible, to do your deals, you have to have a good deal. A good deal is something that has a great exit strategy. The market's good in that area. You have a bridge or a lender set up on the other side. or it's just a great loan to value. Hard money lenders are not looking for deals that are 100% financing with 100% LTV, meaning you're buying something at retail. Hard money is for those deals or those transactions or the properties you owe where you're looking for 70, maybe 75% ARV max. Really, if you want the flexibility, you're under 70%. On land, maybe 50 to 60%. So hard money is an asset-based lender. The asset, the property, the deal has to be a really good deal for you to get this flexibility and to receive this 100% financing. So where do you find hard money? It's typically a local person or a local small company that is lending true hard money. Wall Street has taken over the fix and flip, the big loans, but they have to get you to fit in their box. Hard money has no box. It has flexibility. So it's local people. Any kind of hard money lender out there that has some money to put out has some kind of web presence. So look at Google. Number 2 is go out and talk to people in your real estate groups. They all know some hard money people, especially if they've been in this business 3, 4, or 5 years. So actually connect with your community in the real estate investing to find the local hard money lenders. And third, just go out to the forums like Bigger Pockets, Connected Investors, whatever it may be. Go out and ask questions. Find out who the hard money lenders are in your area. Do some research. Find out, because there's always a need if you're new or you've been in this 20 years for a hard money lender. And what do you look for when you're looking for a hard money lender? What do you talk to them about? Number 1, don't get involved with hard money lenders because they're out there who are going to ask for a bunch of upfront fees. I have some lenders that I've heard that ask for $1,000 or $5,000 in fees before they even do anything, before they look at it. Don't go down that path because most of those people are just collecting fees. So look for people who have experience. Once again, talking to the people on the forums, talking to people in your real estate groups. Check and make sure they're actually funding deals. And make sure they have some flexibility. Go over like, hey, will you look at cross liens? Will you look at seconds? Will you look at commercial properties? Ask them what they will and will not lend on. In every community, there's hard money lenders out there who have flexibility, who will lend to you on the seconds, on the unique properties, have flexibilities, who are not going to worry about credit score, income. They're going to base it on ARV and the deal. You have to put a little time in, so do some work. Go out there and talk to your other investors. Go out to the forums, Google, find them, start working with them, start building that bridge. So the next time you have a deal, you contact them and they can get the funding done. If you have any questions, if you're looking for someone, you need a referral, just reach out to me, Mike at hardmoneymike.com. We have a lot of resources on our website, hardmoneymike.com. Don't forget to subscribe, and we'll catch you on the next video.